Joining us now to talk a bit more about everything going on in the markets is Todd Jablonski. He is the Chief Investment Officer over at Principal Global Asset Allocation. Todd, last time we spoke, we were kind of right in the thick, kind of building towards that crazy week of GameStop and all the other names. And, certainly sentiment had started to get elevated then, but it really, again, peaked just after we spoke that next week. Now that things have leveled off and we've had a little bit of time to look back at that period in markets, how are you thinking about what that tells us about the state of investor sentiment now? Is there anything to take away from it that's more material to the way that you are thinking about, your positions as we get into the rest of the year?
Well, I think a lot of the surge in investor optimism is in many ways due to a fundamentally strong economy and a fundamentally strong outlook for risk assets. We're expecting close to 5% GDP growth this year in the U.S., 26% earnings growth. When you put that picture together and the additional $4.5 trillion that G4 central banks will put on their balance sheets this year, it's a recipe of easy financial conditions, easy access to capital, robust earnings growth that is underpinning, I think, a lot of that surge in optimism, causing investors to seek up in expected return asset classes that we really saw that week. The real issue that I think that investors need to stay focused on is where are we on a risk return standpoint for major asset classes after the accelerated run up? And we do think there's room for risk assets to continue to perform in 2021.
Todd, would you want to see the CEO of a company that you own a partial stake in go out and buy Bitcoin, like Tesla CEO Elon Musk did this morning?
Well, I think a lot of the appetite for Bitcoin, whether it's at the CEO level or at the investor level, has a lot to do with portfolio construction. When you look at cryptocurrencies, what you see is a fairly high level of historical expected return, but also a fairly high level of volatility. But most importantly, it's lower correlation with major asset classes. I think how CEOs perceive the opportunity set there, how investors see the opportunity set there very much matters on how you see the demand of for those kinds of assets moving forward and how you're going to diversify your portfolio. I think the hunt for diversification is really what's driving new investors towards crypto assets, towards new investment strategies. And I think I'll be interested to see how movements in interest rates long-term and the effects of bonds can, in fact, perhaps fill that need as it has historically. Perhaps it's not necessary to look at some of those other areas of the markets for diversification.
Todd, I'm glad you brought up yield because I want to bring them up as well, although kind of on a different point. We are seeing the 10-year yield push up this morning to almost 1.18%. Actually, it is just about there now. We're seeing break-evens push up. There has been the possibility raised frequently this year on the part of strategists like yourself of bonds being sort of the spoiler here of the equity rally. What's the tipping point for that on, say, the 10-year? What are you watching to signal that might be more of a real threat?
Well, I think what we're going to want to watch on the nominal rate curve is really what's happening underneath at the inflation level. There's a lot of reasons to look at the U.S. economy, in fact, the global economy, look at the shocking levels of stimulus that we've put through coming off of the COVID event, looking at the pace of economic activity and say all of the ingredients are there for us to have a liftoff potentially of longer term inflation expectations that have really been on the decline since China joined the WTO quite some time ago. So when you start to think about those forces at work, Julie, there's opportunity for the long end of the curve, yes, to get moved by rising inflation expectations. The tipping point to me, I think, is when investors start to realize that duration exists in many places. And while it's been an asset and a powerful force to drive returns in the past, how that duration looks moving forward, I think, is a key question. And when you perhaps see some negative returns from duration exposure, that's usually what prompts investors to move.
Todd, you are looking at earnings per share growth up considerably by the end of this year. But in the fourth quarter of 2020, we are now on track to see positive year-over-year comps, which is pretty stunning given, again, everything that happened in 2020. How much more upside, I guess, in the way that investors are reacting or looking at earnings in the rest of the year? Is there in the market? How much has been pulled forward, I guess I should ask, because obviously a lot was pulled forward into 2020, but what maybe is or is not priced in as we think about the next couple quarters?
I think the next couple quarters are pretty well priced in almost to perfection, meaning they are priced in with the expectation that we're going to have near perfect execution on operating results over the balance of the year. That's part of the reason for the run up to this point. On a go-forward basis, I think it's reasonable to assume that, yes, we are at near record valuation highs. But with, for example, in a PE ratio, with the denominator growing by potentially 26% this year, you could even see a pullback in valuation, a reduction in the premium for those earnings, and still produce a positive return along with dividends and share buyback. Those things are ways in which we do see a path towards positive returns for risk assets, even as we see high valuations begin to challenge investors and how they think about deploying risk going forward.
Todd, I think you made a very good point earlier on with regards to Tesla and getting into Bitcoin regarding diversification. Do you think this is the type of moment where because of what Musk did, now money managers such as yourself should be looking to perhaps follow his lead and get more into Bitcoin than you have been so far?
Well, I think money managers overwhelmingly are focused, I think, on staying within the invest objectives as prescribed to deliver the investment outcome as put together by the guiding materials. If Bitcoin indeed fits with that potential sort of outcome, it's possible you'll see an uptick in professional investment managers deploying it within strategies. I think additional data, additional adoption over time will allow investors to realize how can we use this asset class to fulfill a client's objectives and desires, and what can be done essentially to harvest the potential return pattern and its diversifying potential with other asset classes to achieve portfolio construction that I think investors are really interested in.
All right, Todd Jablonski, Chief Investment Officer at Principal Global. Todd, it was great to get your thoughts. Thanks so much for jumping on this morning. I know we'll talk soon.